December 15th, 2018 Saturday. Hope you guys are enjoying your weekend. Good to be doing this on Saturday. Friday is always a little bit, hectic. And sometimes I try to rush these and things like that. But Saturday is always a different feel. Market is closed. I have plenty of time to spend a little bit more time on some of the indices and sectors. Today we're going to be looking at Spider, IWM, Qs, Diamond, XLF XLE IBB, and we'll call it a day. I hope you guys had good week trading this week. Again, my name's K Kim with the Traders Club. Let's go through this here in Spider. Obviously, we are well above the new all-time high, and Spider's attempting to make another all-time high here. We've been talking about, if you've been following me, my videos here, we've been building base, which we talked about is the best case scenario. After about 11% decline, we want to see market building a base, take some time to digest its gain. From what gain? From this kind of gain here, 11% decline, digestion, resting, consolidation, base, whatever you're gonna call it, but it's a very, very healthy move. We talked about it once we broke out of this. What did we talked about? We talked about this statistical certainty that the market is going to make new all-time high, and it is going to resume with this primary term uptrend. What I mean by resuming, well, we were in a primary term uptrend. You can see that primary term uptrend. We pull back, 11% correction, consolidated, built the base, and now it is getting ready. It is already actually in place and cultivating and resuming with this primary term uptrend. Everything came to more uncertainty once they broke out of this major pivot here. And we also talked about the market has been more in a docile manner. As you can see here, you can see we see a huge pullback. Took about a month or so, or a couple weeks here to consolidate, made a move, took about a month for a pullback, got up, took another month about a pullback to recover, and then once we broke out of this base, when we got up, it only took about a week before moving back up. It took about a week before moving back up. It took about a week and a half, and now we're trying to get back up here, and you can see how we're finding support at 20 EMA. Prior to that, we saw much steeper declines, but here you can see how where the pullback is shorter than when we're in this box. That's how you know that the character of the market has changed once it has broken out of the base, and now we're creating all-time highs here, right? And also something we talked about last couple weeks, that once this thing breaks out of this rising channel, it's probably gonna get into a second gear. It's gonna go, let's call this a first gear, second gear, third gear, right? It's gonna go faster and faster. You see, something we also been talking about, there's laws of physics do not apply in the market. See, most people think because it's already up so much, how can it go higher? Well, the market is going to go higher, and it's going to even go faster. You see what I'm saying? Do you know what happened in 2015 and 16, right? How many people, right? How many people, how many traders, I mean, whole world was looking for a crash, right? What was their argument? How can this market go higher from this point on? I mean, we already made this kind of move. Can it really go higher, right? A lot of people are waiting for at least a retest of this resistance, right? Or prior resistance levels before going higher. We didn't see that because they say it's up too much. Stocks are too expensive. It cannot possibly go any higher. What do we talked about? Well, the market, we saw a bullish run, the buying pressure that we haven't seen in 30 years. Remember this? So not only market thrived higher, it even went faster. And most people cannot wrap around their mind on this. It's like, what? They're dumbfounded. And this is how the market continues to leave many people behind as the market continues to cultivate and run in this fashion, right? Like I said, many times in the past, If the market was too high in 2013, it's too high in 2015. If it's too high in 2015, it's too high in 2016. If it's too high in 2016, it is too high in 2017. If it's too high in 2017, it is too high, way too high in 2018. What does that mean? It means if they thought the market is too high in 2015, they ain't going to invest in the market in 2018 because now it is way too high. Nobody's going to be full-on bullish at this level. And if you've been following me since mid-2016, you know that I was one of the biggest bull since mid-2016. I've been full-on bullish since then. And I am still full-on bullish in the market here. And I think S&P, we're going to get into 300, 310, 320. I think best case scenario, 320 in this before the year end. But I think 310 is very doable before this year over. But 330, 300 is for sure. I mean, these targets, 300 I've been targeting since I think early part of this year. And that looks more likely is going to happen here. And looking at things more in the minor term perspective here, looking at this more closely, you can see that 20 MA did act as support there, 20 MA there, and also 20 MA. Also last week, we talked about this gap is important. Why? Because a lot of times when the gap gets filled, it does act as support. So this gap got filled. Again, these gaps are deployed by the bulls. Kind of a short-term protection type of deal, right? So the longer these gaps are open, the better it is, right? Because here, opposite is true. Remember that? And I'm going to be fair with my analysis. And we talked about this for months back in what? February, March, April. You guys remember this, right? June, I said this. The longer this gaps remain open, right, the more hectic it is going to be for the bears. You guys remember this. I was a bull, and I didn't say, I'm like, that doesn't mean anything. I didn't say that, right? I didn't say, well, that doesn't mean anything. No, I said, that's going to make things hectic. And bulls got up and attempted to fill this gap, and they failed. And then what happened? Big panic sell. And ever since then, and again, this is not something new I'm talking, I said this before, ever since then, man, things got tough for the bulls, right? And finally, and I've been talking about this for pretty much all year long. Bulls need to go up and fill this gap. And we have to stop the selling pressure coming from that gap. Really, tell me though, was there anybody that you follow on Twitter and StockTwits and YouTube talked about this gap? Nobody, right? But this was a very important gap. This gap was the reason why we've been in this basing period for so long, right? You can see that bulls came back up again. I mean, go check my market update video back in June 13th. And then they failed. But this time around, something changed because back in March, this thing tanked and came back to the lows. But in June, instead of coming all the way down to the lows of this year, it stopped short. If you do a little Fibonacci here, that's a 50% retracement in that vicinity, coinciding with that 100 SMA and rising uptrend support. So this was a first clue that bulls are gaining a little bit of confidence. You guys remember all this? I'm just recapping everything. And then bulls finally got up and filled this gap, right? Remember, we celebrated this. This is a great thing. And in that process, what happened? Bulls have opened these two gaps, these bullish gaps. Ever since then, what happened? Market thrived. I mean, still, not huge breakout type of move, but it is more docile than these pullbacks or these declines. And we're seeing the 20 MA acting as support for a month now, over a month. We haven't seen 20 MA getting respected. You can see 20 MA here got rejected. 20 MA here got rejected. But here, we're finding support. So obviously, the character has changed. The bulls are gaining more confidence. Bulls are gaining momentum. Bulls are opening up these gaps, right? Bulls deployed this gap just in case bears bring it down because we're a little bit extended. And then bulls took advantage of that once that gap got filled, right? Right here. That acted as support. We got a little bit of bullish inverted hammer there. And 20 MA still rising. And this was that another gap area right there. and it was all colliding in that vicinity, and we got up and bulls opened another bullish gap. What does that all mean? It means bulls are winning this battle, right? I've been battling bears since early part of this year, right? I'm in calls on every single indices right now. Spider, IWM QQQ, Diamond, XLF, XLE IBB, everything. And I've been buying the dips and holding full on majority of them. And I wrote journals on QQQs and Diamond, and you guys know that the Spider looking very good here. And I think as long as we can hold 290, 288, can stay above it in the minor term, we're probably gonna gap back up and retest this, right? And then we'll come back next week, next Friday, and we'll follow up on this, but we're still bound by this channel here. So let's see if we can actually break out of this, or we could get up here. Maybe it's gonna pull back, maybe some up and down. I'm not sure exactly how things are going to play out. So that's what we'll take it day by day, week by week basis. But as of today, I wanna give benefit of the doubt to the buyers in the minor, in the intermediate, and in the primary term. And bulls are winning. And my targets are 300, 310, and 320. I think the best case scenario, 320. By the end of this year. Let's go to Russell 2000. Russell 2000, we've been talking about on my Twitter, 2KK. We've been talking about this rising support, right? Are we gonna break below it, see some shenanigan before one higher, or are we gonna respect it? This time I decided to respect it. But also the thing about it is a lot of people are not looking at this longer term support. I think a lot of people are looking at more shorter term support right there. You see that? They were looking at this support, you see. And then that was that trap, and then continue higher. Same thing happened right here. They were looking at this support, this was trap. But if you kind of zoom out, looking at things a much longer term, you can see that we're still bound by this rising channel. Again, even for Russell 2000, you know, if you thought Russell was too high in 2016, oh my God, this thing is way too high. What I'm gonna tell you is this: if this thing breaks out of this channel, it's gonna move even faster and higher, right? And a lot of people gonna be found dumbfounded. Like, how can this be, right? That's what most traders and investors are gonna think. They either gonna stay sidelining cash, or they're gonna be bearish and they're gonna lose all this opportunity. They already missed out in 2017. Do you guys remember how much skepticism and pessimism was in the streets, right? Just before that huge move in late 2017, around like late summertime. How many people thought that crash was coming? And then we saw this unthinkable bullish run, buying pressure we haven't seen in 30 years, which I talked about in my past videos and articles that I wrote, right? So Russell 2000, obviously 20 EMA is holding, prior resistance to support. Everything looks bullish as of today. We got 20 EMA there, 50 EMA there, 100 EMA there. If this thing breaks below it, I'll be buying that dip. I'll be buying that fear. So if it continues higher, I'll be keep holding all of my calls. If it comes pulling back and, you know, shake some people out and there's a fear in the market, what do you think I'm gonna do? I'll be buying that fear. That's the only time I buy, is I buy that fear, I sell the greed. I sell optimism. That's how I trade. In my time frame, obviously I don't day trade, I don't swing trade, I'm a position trader. What is a position trading? Position trading is more like you're positioning yourself, right? So you're buying these dips and you're positioning yourself around the Russell to the IWM ETF and anticipating a breakout, and you hold your position for 6 months, a year, and then you close and you wait until you get to your target and you start closing out your positions, right? And I've been journaling this, especially Qs and Diamond. Here, I'll show you this. If you go to, this is my website, 2tradersclub.com. Here, you can go to my analysis. And then, so you can see my journals here. We got the journals there, me against the bears, Qs. It's already up to part 2, and then me against the bears, Diamond, part 2. So if I go to Qs, I realized the reason I do this. I realized a lot of people who watch me on YouTube, a lot of them don't follow me on Twitter or on my website. I realized they just watch the YouTube videos, so that you know I'm not bullshitting here. So this is part 2. You can always go to part 1, and you can see that my entry is timestamped at 164.85, and that was down here, and I'm still holding full of that. Again, again, it's always easy to say, oh yeah, I went long at 164.85. Yeah, you know, people always do that, but I always make sure that I have my evidence so that you know I'm not just bullshitting you or just trying to get your attention. But you can, you know, if you don't have to follow me on Twitter, but if you want to get article alert, you can always put your email there and it will get the article alert. Only thing about journals though, once it gets published, you'll get article, but the updates, you won't get an update alert through this. You only have to follow me at 2K Kim on Twitter. So when I get updates on the journals, you can see here I haven't done since September 10th here, but when I do updates on these journals, I tweet it out and say I updated with the link below. So that's how there. And also there's, let's go back. Diamond. I think Diamond was the one kind of a little bit tough one at first. So you can see last time, I think it's time for me to, yeah, I haven't updated this. Well, last time I updated, oh, right there. So last time I updated 827. I'll update this coming week, but you can see we finally broke out this 7-month base. We talked about the last update. So that you can see where I've been building my position on the diamond. So that I've been building my position here, 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 right? So this is, and I think I bought this somewhere here, I forgot where. But again, they're all time stamped on Twitter with the dates and stuff, so you know, but holding full on diamond at this point. So yeah, feel free to follow me at 2K Kim here. You can just click on that, and you can put your email address here. So any new articles that or videos like this one, you get the alerts on your email inbox with the link, so you can just go right to it. So you know now that I've been journaling these two. And I decided Diamond and Qs to do the journal, but I am in calls in all the indices and a lot of sectors. Anyway, since early part of this year, Qs just didn't give me enough of setups that I like to keep adding. I was actually wanting for Qs to come down a little bit lower. I wanted to buy it a little bit more here. It never gave me that, so I kept missing my entries. And you know me, once I miss my entry, I do not chase. Right now, I'm looking at maybe if Qs come down, because right now we are in this rising channel, right? This is a rising channel there. And again, it may continue to respect this channel. You know what I mean? Or I think sooner or later, what the market likes to do is, if everybody, so many traders are, relying on this channel to trade off of, and it's been working. You go long here, place your stop below it. Go long here, place your stop below it. Go long here, place your stop below it. It's been working. That's good. But sooner or later, market does not like that. So what the market is going to do is going to maybe do that, and then like pull back and create panic. And a lot of people are going to say, well, you know what, it break below the channel, maybe this thing is ready to much steeper pullback. And I'm waiting for this thing to maybe come down to 175, 177, and this is a level that I'm thinking about adding more. Remember what I said, I always buy fear. So this is why I bought this fear right there. And if this thing comes, or it was up here somewhere, and then if it comes down, that's what I like to add. And I think my target, oh, I don't have target on this. I think it was, I forgot. I gotta look at my other tab, but I think it was around 200 or so, 210, somewhere in that vicinity, maybe 190, 4 or 5. Let's see. Let's do this. I'll adjust this next week. I think it was somewhere. Some of these levels are gonna be my next targets. About 195. I'll maybe close out some. What I'm looking for is either it's gonna do this and decline, or it's gonna break out of it and then retest and do that. So again, nobody truly knows exactly how the market is gonna play out in the minor term, but if this thing comes down and break below and creating more panic, I'll buy that fear. If not, if this thing breaks out, then I'll close out some, pull back to retest this rising uptrend support, right? Then I'll buy it for the next leg higher. So that's, so I have a plan for every possible scenario. So let's see. So that's why I don't really care how it's going to play out. It's not fixed. I'm not fixated in one way. So if it continues higher, I'll keep holding. If it reaches my target, then I'll close out some. If it pull back, I'll add more. Something like that. Let's go to Diamond. So Diamond, since my last update on my journal, you can see that we pulled back. This was my last update on my journal post. And we pulled back, we saw a little bit of a bull flag there, and we saw 20 EMA holding, and we made new high actually, if I just go like this, right there. So in the micro term, you can see that we're holding prior resistance as new support. We got this gap. The gap is actually still open, right? Because this was a closing, and then this was opening, and then where that gap is holding. You see what I'm going to do? Actually, I'm going to do this, because I think in the micro term, 261, 260 is going to be important. If it continues lower, 20 EMA has definitely been acting as support here and here. So that's the level, watch 258. And the box area, actually, that's the breakout level. But I want to give another level is this level, because that's a gap area and that's a prior resistance area. So we got the box area 256 and 254 if we see steeper decline. If not, what we need to see is we need to see this gap down, right? You see this one? See, all the indices already, Spider, especially Spider, right? We just talked about it earlier of this video that the Spider has broken or filled this downside gap. Diamond is one of the most lagging index that has not filled. So there's some, because of this, I think bulls want to go and fill it, pull back, and maybe, you know, up and down a little bit, and then break out a new all-time high. Right? I think that's what's in stored for Diamond. So looking good here. We got plenty of gaps to go around. We got this gap. It's a pretty sizable gap too. That's actually a big gap. So that gap still open. This gap open. This gap open. We got another gap here. Let's fill this downside gap and let's go up and down a little bit and then break out, right? And then Dow is ready for another run here. Let's go to Banks. I've been talking about Banks quite a bit here. Banks holding 50. Right, 50 EMA was held right there, and 50 EMA was holding there. If you want, you can also do your little bit of rising channel, rising pivot. That's a rising pivot. This was a resistance, support, support, support. So that's a rising pivot. We're holding that. I can put another level right there. So 2870. Do you know why this level is important? And this was something we should celebrate. Look at this. Bears had this downside gap. It's been open. Remember what I talked about Spider? Everything's happening and they're all following Spider's footstep. Diamond is following, XLF is following right now, right? This downside gap has been open for how long? Like for 6, 7 months, right? Finally, we got up and filled it. We're pulling back a little bit. That's okay, right? We needed that. We need to fill this downside gap. There's no longer downside gap. Yeah, there's no longer downside gap on XLF. This is the only downside gap that was open. That's been filled. And that fill, a lot of times gap gets filled. It acts as either resistance or support depending on the, you know, the side of the gap, right? If it's an upside gap, it's going to act as support if that upside gap gets filled. If this was a downside gap, so that downside gap got filled and it's going to act as resistance. That's why we saw pullback. Keep in mind, bulls have this gap still open. I want to see that gap remains open so we can see buying pressure coming from that gap. We saw this rising pivot holding. Little bit of a one white soldier candle there. You guys know that I don't do much about, you know, though I know every single candlestick patterns out there, I don't always do them just because, you know what I mean? Candlestick analysis is very short term, maybe a day trade or something like that. But this is known as one white soldier, meaning this actually is a gap. There's actually a little gap here. You see this? There's a tiny gap right there. So it gapped up, right? And opened 50%, around the 50% of previous day's red candle and closed above previous day's close or open, right? So it gapped up 50% of the body of previous day candle and then it closed above previous day's open. That's what you call one white soldier. One white soldier is actually rather one of the probably the stronger candle patterns. So let's see if there's a lot of resistance going here. So you see if you can continue higher. But I think that's a good news that we filled this gap. We're pulling back. We're holding this resistance. 50 EMA is in that vicinity. We open a little bit of tiny gap. And let's see if we can continue to make its move and get this minor term momentum to thrive, right? To the upside. Let's go to XLE. XLE, we had a couple traps here. Right? I think a lot of people are looking at this level. And I think a lot of people are putting their stops underneath it. And you can see how the market kind of got up here. And that's the level though, coinciding with the 200 SMA. 200 SMA did come and act as support there. But we do have a downtrend resistance here. Really though, technically we're still in this falling channel or the big bull flagging type of pattern. That's kind of where we're at. I do think that XLE is going to break out before, I mean, maybe if not this month, early next month. And once the XLE breaks out, I think it's going to thrive. I think it's going to make this big move. When I look at a long-term picture, XLE, I think it's going to, you know, outperform other sectors, if not this year, next year. I think this year, and it's continuing next year. So, I think I like energy sector here. I like long-term picture, but in the short term right now, obviously we are still consolidating. I'm not sure exactly when this thing is going to break out, and it's going to take a lot to break out. We got this downtrend resistance. We got this prior high, swing high, horizontal resistance, and this too. So we got a lot going on here. But if I had to guess, and the best case scenario would be something like this, like that, like that. So we got left shoulder, head, right shoulder. In that process, we have cultivated higher lows. And you want to see this 100 SMA doing like this, right? That's 100 SMA. This going up above 100 SMA, pulling back to 100 SMA, and then break out. I am kind of anticipating something like that. I got IBB here, biotech. I like biotech long term as well. It's been faithfully cultivating higher lows, right? Higher lows. That you can see right there, and this was important support. I'll let you guys go with this one. That was a prior resistance, but I'm perfectly respecting. Now, how are you going to dispute technical analysis? Oh man, technical analysis is just a voodoo, right? Seriously, how? I mean, when you see these levels are perfectly getting respected. And you don't always get the luxury like this ever. I mean, a lot of times what the market is going to do, get slightly below it, fake everybody out, and then go higher, right? But this time around, we just perfectly respect it. And you can see these moving averages are rising. I do think that IBB also going to make new all-time high probably this year. But it's a rather volatile index. And we have this gap open here. Remember, we've been tracking gaps. Gaps are important. Let's put another level there, right there. That's important, 113. As long as we stay 113, I have to say if this thing comes down to 113, challenges that, not a bad level to buy, you know, maybe some calls or even some shares or something like that. Is again for longer term holding, for position trading purposes. Everything I talk about here, any kind of, you know, buying levels, I'm only talking in a sense of position trading and maybe longer term holding, not day trading or short term trading. So 50 MA is holding there in that vicinity. I won't be surprised to see this thing coming back down, maybe retesting this, retesting the gap area, challenging. Possibly fill this gap, but it'll be better if we don't fill that gap. We can see this bullish gap remains, and we want to make things hectic for the bears, and then this thing continuing higher. I'm actually eyeing on this one, possibly for some kind of entry there, but that's everything. You guys enjoy your rest of this weekend, and good luck trading next week.